In the world of personal finance, we tend to assume that if someone is earning a high income, they're really wealthy and always will be. But the truth is that earning a high income doesn't automatically lead to wealth. In fact, according to Payments Intelligence, a 2024 survey revealed that more than 1/3 of Americans earning over $200,000 a year are living paycheck to paycheck. This is an insane stat, and it goes to show that if you don't know how to handle money, you can get into deep financial trouble no matter what your salary is. So today, we're going to talk about the 9 biggest mistakes that high income earners make. The first one is lifestyle inflation. Lifestyle inflation is a very common trap that high income earners fall into. This is where your expenses increase in proportion with your income as you upgrade your lifestyle. There's a very strong tendency for people to just spend any extra income they get on instant gratification like bigger houses, expensive cars, fancier clothes, tech gadgets, and luxury restaurants and vacations. So we often see high income earners who are not getting anywhere financially because their extra income is spent on stuff instead of assets that increase in value over time. Instead of building wealth, these high income earners end up in the same position they were in before when their income was much lower. This is one of the easiest ways that high income earners fail to build any wealth because it's so normalized and it's even expected to show your money off to people as you earn more. But it's important to resist lifestyle inflation because this is how high income earners get trapped in the rat race of working in a job they hate to pay for an expensive lifestyle which ultimately doesn't bring them any fulfillment. The trick is to try to keep your expenses roughly the same as your income increases. Don't get me wrong though, there's nothing wrong with using some of the extra money that you're earning to make your life more comfortable and enjoyable. For example, if you can afford to move out of an unsafe area, then do it, but it doesn't mean that you go and rent a penthouse apartment in a trendy part of town. So I think you know what I mean here. It's all about being sensible and just keeping things in check. Number 2 is not creating a budget. A lot of high income earners feel like they don't need a budget because there's lots of money coming in for them. They just think that whatever their spending level is, that they can easily manage it and quickly recover from it. But the truth is that everyone needs a budget, no matter how high your income is. It might be hard to believe, but having worked as a lawyer for the best part of 10 years, I can tell you that there are a lot of high-flying lawyers on huge money. I'm talking like 500K plus a year, who have absolutely no idea where their money goes. All they know is that they don't have any money left at the end of the month. A budget can really benefit these kinds of people because it helps them track and understand where their money is going, and it holds them accountable if they overspend. So a budget really does help with avoiding things like lifestyle inflation because it makes you conscious of your spending habits and it gives you the feedback that you need to change your spending habits accordingly. The problem is that it's really easy to overlook a budget when things are looking good on the income side of the ledger. Number 3 is assuming a high income will continue forever. Sometimes earning a high income can make people feel indispensable to their employer, like they have high job security and that they will continue to be paid their current income or an even higher income into the future. This is a dangerous assumption to make because whether we like it or not, the fact is everyone is disposable no matter who they are or what their job title is. We see CEOs get pushed out of their roles all the time, so there's a real possibility of this happening to any other high income earner too. Because they're so expensive for a company to keep on the payroll, there's always a chance that they might be let go in the next restructure if their role isn't that valuable to the company anymore, or if the company just feels like they have other employees on lower salaries who could do the same work. And it can sometimes be hard to find another role which pays as much, especially if you're really high up. There aren't a lot of roles like that available all the time. But most high income earners don't really recognize this risk, which can make them complacent about the level of income they expect to receive into the future. High income earners also don't often account for the possibility that they might get to a point in their life where they don't want to do or can no longer do what it takes to command such a high salary anymore. Because of the long hours they've worked over the years, they might have missed out on a lot of family time or be dealing with health issues which might make them want to take a step back and live a more balanced life. And in most cases, when it comes to earning a salary, if you're not willing to keep on putting in the long hours, you can expect to make less. The 4th biggest mistake that high income earners make is investing too late. As I mentioned earlier, we often give high income earners too much credit when it comes to personal finances. We just assume that because they earn a lot of money, they're really good with money and they have a lot of wealth. While this is true for some, a lot of high income earners are overconfident about their finances because of their strong cash flow position, and so they fail to follow the basics of investing and building wealth. Their strong income makes them feel like they have plenty of time and opportunity to invest and build a nest egg, so they put off investing or they don't think about it at all. Another reason why high income earners can wait too long to invest is because if you're earning a high salary, you probably have a pretty demanding job. So a lot of people on big money are too consumed by their work to get around to investing and building a nest egg until they're much older, when it dawns on them that they really need to set themselves up for retirement. And during this time, they would have given up years or decades of compound growth on their investments. The irony here is that this is significant wealth which could have just been made passively while they slept, but instead they slugged away at their job all that time. This is one of the biggest things to understand about building wealth and the power of compounding, is that if you consistently invest in good assets over decades, the passive returns that you'll get from those investments will dwarf the amount of money that you will make from laboring away at your job for all of those years. But a good chunk of high income earners don't understand that a big salary alone doesn't build wealth, and that you need to make your money work for you rather than spending all your time working for money. It really doesn't have to be complicated. If you have a strong income and the fundamentals of saving and investing down pat, then it's a pretty straightforward road to building significant wealth over time. The fifth mistake is an overdependence on salary. This point really is an extension of the mistake of high income earners failing to invest early enough or at all. Lots of people on big money are overly dependent on their salary. In many cases, it's their only source of income. Because everything depends on the income from their job, they double down on it and they do everything they can to protect it by giving more and more of their time to their job and making it their life. As all of your eggs are in one basket, there's obviously a lot of pressure that comes with this approach, and there's the constant exposure to the risk that you might just lose your job and be left with no source of income at all. But by making smart investments early and consistently, those investments can provide you with passive streams of income so that you're not entirely dependent on your salary to sustain your lifestyle, and so that you then have less pressure on you to perform in your job and keep working such long hours. Number 6 is making poor investment decisions. For the high income earners who do invest, some of them make some really bad investment decisions that destroy their chances of building any wealth. One of the reasons for this is that high income earners are generally intelligent high achievers. Warren Buffett often talks about how really smart people can make some really dumb investment decisions, because the concept of just saving some of your income and continually investing in proven assets over time is too elementary and boring for them. They fail to believe it's that simple, so they look at more complicated and riskier and exciting opportunities. They basically think that they can beat the game and get better returns than everyone else because they think they're smarter, which usually results in big losses. They also usually have high earning friends and colleagues who they want to one up to prove they're smarter or better than them, so they take unnecessary risks to try to achieve supernormal returns. They might also just generally be overconfident about their investing skills and knowledge because they have a high paying job and they consider themselves successful. But this doesn't make them good at everything, and it doesn't automatically transfer to being a good investor. Investing is a learned skill which takes time. So there's a common theme here of some high income earners letting their ego get in the way of making good investment decisions. Mistake number 7 is not paying for professional advice. It always amazes me how many people aren't willing to just pay for professional financial advice. In my opinion, if you earn a high income, you're in a very privileged position where you can afford to get a team of professionals around you to make sure you're doing all the right things with your money and to set up your financial future and protect your wealth. At a minimum, I think you should be looking at some of these professionals. A tax accountant to ensure that you're minimizing your taxes every year. As a high income earner, taxes are going to be your biggest expense, so you need advice on that. You'll also need a financial planner who can help you with preparing a long-term financial plan to make sure that you're on track for your goals. They can also help you with investing your superannuation and investing in shares if that's what you want to do. And they can also help with getting you the insurance you need in case you die early or you suffer an injury or a disability which prevents you from working. And I think you also need a lawyer to make sure that you're protecting your assets in the best way you can. I'd also look at getting a property investment advisor and a buyer's agent on your team if you want to invest in property. Too many high income earners are cheap about this and they don't pay for the advice that they need. They really just should be taking advantage of the expertise on offer to put themselves in a position where they're basically financially indestructible. Trust me, if you have the right people on your team, the money they will save you and make you will far outweigh what they will cost you. This is something that is so often overlooked because there is always so much focus put on earning more money and building more wealth, but people don't really talk about how to keep it and protect it once we get there. So get a good team around you to help you avoid all of your hard work being undone. Mistake number 8 is getting stuck in a terrible job. Companies are very good at paying you just enough to keep you around, keep you loyal, and keep you from doing what you really want to do. So it's easy to get comfortable in a job that pays pretty well, but that you don't like. That's why a lot of people in jobs are like the proverbial dog laying on the rusty nail. They complain about their situation, but it's not bad enough for them to actually change it. And once you start earning a certain amount of money, it can be really hard to walk away from that kind of money and take a lower paying role or change to a career which you'll actually be happier in. It's just so tempting to stay on that path, but this is really just a big trap that keeps you in a job that you don't enjoy. In my opinion, it's very difficult to be happy when you have very little autonomy over your life because your time is spent working in a job you hate, even if the pay is great. The harsh reality that a lot of high income earners learn too late is that at the end of life, nobody wishes they spent more time in the office. According to the book, The Top 5 Regrets of the Dying, one of the biggest regrets people have at the end of their life is they wish they had the courage to live a life true to themselves, not the life that others expected of them. So some high income earners need to be very careful about spending too much time serving an employer in a job that they don't like and instead do what they truly want to do. Mistake number 9 is not appreciating the cost of chasing money. One of the most important things I've learned in life is that every choice you make involves a trade-off. If you want something, you have to compromise on something else to at least some extent. And the same goes for earning a high salary. If you want this, in most cases, you have to work hard for years to climb up the corporate ladder to increase your income. And once you get there, it's not just smooth sailing. There's an enormous amount of hard work that goes into making a high salary and maintaining the position that pays that salary. This can include things like working long hours and weekends, stress, office politics, and putting up with a toxic work culture. This mixture of things can easily result in costing people their health, their relationships, and their general happiness. So before just chasing a higher and higher salary, it's important to stop and ask yourself questions like, why am I chasing more money? In what way is it going to improve my life? What is the likely cost of chasing this extra money? And is the cost worth it? In my experience, high income earners don't take the time to ask themselves these questions. They just chase a higher income by default, thinking it will make them happier and solve their problems. There's usually very little self-examination or self-awareness going on there, and they're most likely just chasing external metrics of success, which give no real fulfillment. But if these questions were given proper consideration, a lot of people might realize that spending all their time in the office instead of with family isn't serving them anymore, or it's costing them their mental or physical health or the quality of their relationships, or it's just preventing them from having more time off to do what they want to do and actually enjoy the money they've earned. In my opinion, these are things that will give you true happiness rather than more money. Well, that's it from me today, guys. I hope this video has shown you that high income earners basically face a lot of the same issues as lower income earners when it comes to money. So if you can get the basics right, you're giving yourself the best chance you can at building wealth. If you enjoyed the video, please consider giving it a like and subscribing to the channel. I really do appreciate any support you can give. And you might want to check out this video on your screen right now about how your net worth explodes after the first 100K. Thanks for watching, guys, and I'll see you in the next one. Bye bye.